Can we go into a little bit more depth as to the methods that you teach people at the Institute?
Yeah, of course. We can skim over it. You know, it's difficult to do in a few minutes, simply because the public course usually takes a whole weekend. But essentially, it's a macroeconomic, top-down, systematic asset selection process with bottom-up and technicals and risk management thrown in, attached. Because I think, you know, you, as a trader, when you're learning, you have to go through processes and checklists to make sure you're not doing anything stupid. And essentially what this is you know, from my experience over 16, 17 years, getting that on paper and all of the basics so you can understand it. And then with the course comes like PDFs and Excel spreadsheets where you're basically doing it yourself and teaching yourself afterwards. So in terms of methods, a lot of risk management that you wouldn't expect would be used, but is actually used by a lot of hedge fund managers. Top-down approach, really starting off with 42,000 assets globally and drilling down through various levels and then getting to a point where you've got a watch list of 30 to 40 situations and then you've got a portfolio of 10 to 20 positions. And then it's about, obviously, the risk management is knowing how to manage that portfolio, knowing what to do in bad situations, knowing what to do in good situations, and a lot of stress testing. So making assumptions that, for example, the market, if it goes up 10%, or if a war is announced, what will happen to the oil price? What will happen if the oil price goes up 25%? What will happen to my portfolio? So doing lots of stuff like that.